So thank you for joining me, Chris. I appreciate you're probably busy at the moment with the way the markets are. So from me, really, I just really like a quick update for the last 6 months where we are. So 1st of July today, I can't believe where that time has gone. But for the benefits of clients, really, I don't know if you can give us a bit of a recap.
No, absolutely, absolute pleasure. It's absolutely been a fascinating year. Clearly, a hugely worrying year at the start of the year when we entered it and we thought about, oh my goodness, the COVID-19 impact was going to be material. But fortunately, governments have moved forward. You've seen businesses start to open up again, and we're even allowed to start to travel a little bit more now, certainly compared to what we could do in January or February. So what that's meant is that financial markets have generally pushed up. They've performed well. You've seen some gains there, particularly in places like the UK and Europe, just because nobody believed that there was going to be recovery this year. So that's been the really sort of positive notion of this year so far. You've seen interest rates remain very low. That's still the thoughts from central banks at this moment in time. And we expect that to continue over the rest of this year and into 2022. So I would say the outlook looks pretty good. And a bit like we're all living our own lives, kind of we're sort of opening up again. You're seeing the same happen to business, and that can only be good news for the financial markets, you would have thought, over the next few months.
Excellent. What do you think are the main challenges going into the end of this year then, the next 6 months? What are the main challenges that we need to look out for?
I would say there's two real challenges. The first is the unfortunately obvious one, which is we suddenly get some very bad news about a COVID-19 vaccine issue or something like that. Fortunately, I think there we're going to be okay. More of a challenge maybe, and it's the usual issue for financial markets, is that we've just made some quite large gains over the last 6 or 9 months. Markets have performed pretty well, really, given everything. And obviously what you can see and have seen historically in financial markets, you can get times of uncertainty. Perhaps people worry about higher interest rates next year or the year after and the impact of all of that. Let's face it, the government has been helpful in the sense that they've borrowed a lot of money, but of course at some point they've got to start to pay that back. And are we going to see things like higher taxation and issues like that over the next year or two? That is possible. But the good news is I would still say at least the world is improving, and that's what the best companies of the world and the best investments can do a good job in. So yeah, some challenges out there. Do I expect at some point higher interest rates, a little bit more taxation, some issues for the bond markets? Absolutely. But actually, if we see some of that, that's a sign of progress too, that we're not saying, oh my goodness, the COVID-19 challenge is still there. What we're saying is a reality of moving back to something that we would regard as a bit more of normality, really.
Great. Last question for me, Chris, just because it's very relevant at the moment. House prices, they seem to have been bonkers of late. I know here in North Wales, there's been, massive growth levels in the price of property. Do you see that continuing when stamp duty ends, or do you think it's going to flatten off at some stage and even maybe correct?
Yeah, I think there are going to be some changes with the housing market. You're absolutely right. Wales has been extremely of interest to people. My goodness, the number of people who want to move there, to buy houses there, it's been very apparent in many parts of the country. The trouble is that things are getting very expensive from a housing market perspective. And as I've already mentioned, we're probably going to see at some point in the next year a slight rise in interest rates by people like the Bank of England. And so as a consequence, you put all of that together, too high prices, interest rates going up, and as you say, things such as stamp duty benefits and related starting to change, you'd expect house prices to start to fade out. And at this moment in time, probably not push back aggressively, but just to stop going up, to be a bit more normal. It's nothing too problematic at the moment, but if you're expecting house prices to keep on going up like they've done over the last 6 or 9 months, a bit like everything, it doesn't happen all of the time. That's the reality. But as always, a good house is always a good house. If it's in a great village or a great town or something, even better.
Great. Thanks, Chris. Thank you for the updates. Look forward to doing the same next month.
Pleasure.